So I'm so glad you're all here today. And I'm going to start by introducing Freddie Molina, who is a financial coach with SparkPoint. And Freddie's career began in finance as a consumer banker, where he worked closely with business and consumer clients in helping them establish a banking relationship. He later became a senior premier banker, where he learned many of banking systems, business, underwriting guidelines, and regulations. And this knowledge has allowed him to educate and empower clients to understand how they can borrow and save money safely. He has a passion to educate. His passion to educate in finance grew while working at the bank. He volunteered to educate families of Searles Elementary School in Union City in partnership with SparkPoint Financial Services, a nonprofit program created by the United Way Bay Area. Recognizing the dire need to educate our communities in personal finance, he pursued the opportunity to work closer with clients, individually and in group workshop settings for the City of Fremont's Family Resource Center, where he helps others build their assets, eliminate debt, and improve their credit so they have a fair shot at getting ahead financially. Freddie, we're so grateful for you to be with us today, to share with us your expertise and give us some information about the program you work with and how some of our participants might be able to access this information for themselves and or for their clients. Thank you so much for being here.
Thank you so much, Beth, for that introduction. Beautiful. I appreciate it. I hope you can all see my screen now. Let me get my notes here ready.
Not
Thank
quite
you so
yet.
much.
There it is.
All right, sorry, I'm going to keep my camera off so we can help with the bandwidth. I think the bandwidth is having the issue here, but thanks again. Good morning, everyone. My name is Freddie Molina, SparkPoint Financial Coach with City of Fremont's Human Services FRC Division. I just want to take a moment to provide some resources here for you, kind of introduce you to some if you're not familiar with them, and also inform you about a great resource that's a new resource that's out there for the Alameda County residents. So I'll start by telling you a little bit about the Fremont Family Resource Center. So the Family Resource Center is the go-to place for a multitude of services and information assisting individuals and families. Whether it's housing, employment, mental health, immigration, childcare, rehabilitation, or benefit assistance, you'll find it all conveniently located at the Fremont Family Resource Center. Through the FRC's Welcome Center, families are supported in over 5 different languages. And on the screen here, you can see that the FRC core team, which is what I'm part of, we're one of over 20 different agencies that are co-located within these 2 buildings. We have 20 plus agencies from the state, the county, the city, and nonprofit agencies, all co-located within these 2 buildings, which is what makes it the one-stop shop. It's a welcoming place where families are provided quality services and are encouraged to build on their strengths and help themselves and others. And that's our phone number there. Our main line is the 510-574-2000 line if you ever have any questions or need any resources from the FRC. The FRC core team provides family support services, including family support coordination, safety net programs, mental health therapy for adults, including those on CalWorks. We do have a very nice program for CalWorks recipients called the Working Wellness Program. Amazing program. It's basically a team. You know, you sit with the team and find out what your needs are, and you create a plan to meet those needs. And what I love most about it is the fact that there's a financial coach as part of that, because if you think about it, most of our problems can come from a financial standpoint, right? It's either we're struggling because we're not making enough money, we're not saving enough money, our credit is low as a result of that, we have high debt, etc. And so when we find that when we plug in a financial coach into that working wellness team, it really helps out a lot in reducing and minimizing stress. And that's where SparkPoint comes in. SparkPoint Financial Services. We offer free coaching, free workshops, and free tax preparation through our VITA program. SparkPoint Financial Services programs, FRC staff assist families in building assets and becoming more economically self-sufficient. The program offers financial education, coaching, credit repair, like I said, free tax filing through the volunteer income tax assistance program. We have over 155 IRS certified tax preparers that can help folks prepare their taxes and or back taxes for up to 3 years back, all for free. Another great resource that folks don't know about, or an option rather, is the OIC, the offer in compromise. So if anybody ever owes the IRS, even if it's $5,000 that you owe the IRS in back taxes, that's negotiable. We can negotiate that for you for free. Very often, depending on your income, your assets, and all of your expenses and your needs, we can negotiate that debt down to zero. We might offer the IRS $2,000 on your behalf, and they'll say, you know what, based off everything you have going on right now, you can't afford to pay us $2,000. Let's just call it even. Let's just start over next year. And that does not affect your credit. It doesn't affect anything. You could do that. You can file for an OIC almost every year if you needed to. Probably wouldn't get approved, but the option's there. During the COVID-19 pandemic, we've been a beacon of support for local families, offering grab-and-go food, cleaning supplies, diapers, and PPE. And so I present to you now the Financial Navigator program. The City of Fremont's FRC recently partnered with the International Rescue Committee, IRC, through the CFE Fund in providing phone-based financial navigation services at no cost to Alameda County residents through the FinNav program. Financial Navigators provide 30 to 40-minute phone sessions to help clients manage financial challenges and identify the best course of action to meet their financial needs. Financial Navigators provide appropriate referrals to services and programs to address those needs. It's basically a information and referral program. As previously mentioned, these sessions are absolutely free. All a client needs to do is complete an interest form online. So you can either take a picture of the QR code there and it'll take you to the interest list, or you can visit https://finnav.org/Alameda, or you can call 510-574-2000, which is the FRC line, and we can get an interest form or registration form completed for you. And then you would have one of the Financial Navigators call you for that 30 to 40-minute session. If you don't have access to the internet, like I said, you can call that phone number and we can get you registered. What happens during a session? A Financial Navigator will ask questions about a community member's concerns and provide the appropriate resources, from rental assistance to food insecurity, unemployment, managing debt, and more. The Financial Navigator will use both a local and a national resource toolkit to identify the appropriate referrals. Unlike a financial coach like myself, who can provide advice and help a client create a personalized financial plan, a Financial Navigator simply provides INR services, right? They just inform and they refer. And although someone, including ourselves, may feel like we have everything that we need from a financial standpoint, I want to encourage you all to take advantage of this free financial resource. Speak with a Financial Navigator, learn about different resources that are out there that maybe you could take advantage of. If not, help your friends and your family, especially your clients with. All right, it's always good to be informed. And that's pretty much it. Thank you very much for this opportunity.
Thank you so much, Freddie. We really appreciate this. It's a great organization and a wonderful service that you provide. Thank you so much.
Hey, Beth,
And now
I see
we're
a
going to.
question
Yes, please go ahead.
from Rita. She
Yes.
just asked, what languages does the Financial Navigators have?
Great question. We actually have, I wish I had a list of them, but we have a lot. We cover Spanish, English, Farsi, Urdu, Chinese, both dialects. I believe it's Cantonese and Mandarin. Many other languages. We're prepared to handle any language in the Bay Area.
That's great.
Yeah. I'm sorry, I should have had a list up here for you, but thank you. I appreciate that question.
Yes, great question. Thank you so much. And thank you for your question. All right, now we're going to move on to our training, credit cleanup. And we've got with us today Gina DeGusto, who's a senior attorney at HERA and a graduate of Harvard Law School. Prior to joining HERA in 2013, Gina provided advice on landlord-tenant issues at a local legal services program, completed a fellowship at the Superior Court in Alameda County, and spent 2 years representing residents of publicly subsidized housing before local housing authorities. Gina was selected to the California Super Lawyers Rising Stars list in 2016 through 18 for her work in consumer law. The Rising Stars list is selected by peer lawyers and recognizes no more than 2.5% of up-and-coming attorneys in each year. At HERA, Gina works on unfair debt collection, wrongful credit reporting, mortgage and foreclosure-related issues on behalf of Californians in need. Gina also brings significant litigation experience with expertise addressing abuses by homeowners associations. Gina, thank you so much for being with us again. We're so glad you're here and presenting for us today. So I'll let you just take it away. Thanks.
Good morning, everybody. I'm going to do my video, and if for whatever reason there's a connection issue, I'll stop it. But you know, I like to have that human connection because I know you're all out there and it's early in the morning, and I'm really excited that you're all here to learn about credit. I can see a lot of participants this morning, and I'm really excited that you're all here. So today we have a lot of material to go through. It's going to cover, we're going to talk about, you know, what's in a credit report, how to read it, what to do about it, and even a little bit at the end, how to shop for credit to avoid any future problems. So there's a lot to cover. But before we start, I do want to start today with a poll. And I think Leah might be helping me out with this because I'm just curious to know from folks, for those of you, how many of you, if you wouldn't mind, and if the poll doesn't pop up, let us know in the chat, oh, there we go. There's our poll. I would like to know, when was the last time that you pulled your credit report? So if you don't mind, let's answer the poll and see how things are shaking out. Okay, so we have a good handful who have done it in the last month, and another good handful who have done it in the last year. And then there's a smattering of folks who did it in the last 5 years. So I'm really delighted to see that there's not anybody in that never pulled. So it's really good. I'm very glad to see that folks are pulling their credit report, are paying attention. And it's actually very helpful if you've pulled your credit report and taken a look at it, because a lot of this, it will help you make connections, and it will be even more relevant what we're going to be talking about today. So on that note, first, I just want to explain and make sure that folks understand what is a credit report. Most of the time when people come into my office, they say, you know, they're really hung up on their credit score and what that means. And I like to slow every conversation down and say, okay, well, first let's talk about your credit report, because that's really where the score comes from. So a credit report is a collection of your information. Within a report, you will see stuff like all of the accounts that you've taken out, all of your credit accounts, generally how much debt you carry, pay your bills on time. There's going to be information about any judgments against you. There's a lot of information that's collected about you. But what's interesting is that if you ask most people, you know, who are the credit reporting agencies? Most people know of the big three. So that's on the left side of your screen. You'll see Experian, Equifax, and TransUnion. Most people are familiar with those companies. But what people don't realize is a credit reporting agency is just any company that collects all of your information and then reports it to third parties. And so there are actually several credit reporting agencies out there. And some of them are specialized. So for example, there are companies that collect specifically for employment purposes. So for example, IntelliCore, you'll see there on the right-hand side of the screen, or Checker. For tenants, a big one is CoreLogic. I see that a lot. And then even when you apply for a bank account, a lot of times the banks will run a background on you and they'll use something called checks systems. I see that one a lot. And so just be aware that there are a lot of credit reporting agencies out there. There's a lot of different types of credit reports, but all of the rights, the legal rights and options that we're going to be talking about today, they apply across the board, both to the big three, as well as all of these different credit reporting agencies on the right. So there's a lot of protections that we're going to be talking about today, but keep that in mind. So there's a little delay in my computer here. Bear with me. Okay. So the reason why it's really good that you pulled your credit report recently, or a lot of you have, is because, you know, your credit and what's in your credit report can impact not just loans, which is what most people think about when they're looking at their credit report or their credit score. And it is important because credit can impact not only the size of the loans you're offered, but the rates in the interest rates that are offered. But your credit can also impact your housing. So, for example, a lot of folks, especially in the Bay Area with such a hot housing market, when you apply to be a tenant somewhere, a lot of potential landlords will ask to pull your credit. And this also applies for public housing. We're seeing, we frequently see credit pulls for folks who are applying for public housing. So it's really important, not just in the borrowing setting or in the banking setting, but for housing. It can also impact insurance and insurance rates. And then in certain limited circumstances, potential employers can also pull your credit. Now, some people may say, why is my credit being pulled for a job? But certain positions, it might be considered relevant. So just be aware that it can impact a lot of different aspects of your life. And so it's really critical to know what's in your report and know where you stand and know what to do about your credit report, because you don't want something that's in your report to negatively impact the things that you want to accomplish. So just so everybody knows, there is a law, it's called the Equal Credit Opportunity Act. And this federal law, basically what it does is if you apply for some type of line of credit, or if you apply for housing, and if you are denied credit or denied housing, or you have some type of denial and it's based on your credit report, then what happens is this law tells or effectively says, if you're denied, you have the right from you're being denied either the loan or the housing, whatever it is, you have a right to access the score that was used in the denial, the name, address, and telephone number of the credit reporting agency, the company that provided the report about you, your right to pull your credit report for free. And you want to do that within the first 60 days of the denial. So make sure that you do it quickly if you do get a credit denial. And then you're supposed to also be informed about the process for fixing mistakes on your report or the factors that were considered that were in your report that was the cause for the denial. And it may seem, for some people, they may say, well, a denial is a denial. Why do I need all of this information? But what I will say is actually this information is critically important, because if you know what report was used and the information that was relied on for that denial, you may realize that the information that was used to deny you that line of credit or that housing was wrong, and that it can be fixed, and that there might be a way to either appeal or to improve your situation so that if you try again, then you'll get approved the next time. So if you get a denial, make sure that you get a copy of this letter from whoever's denying you that credit opportunity. So here's a couple samples that I threw in the slides. So the first one is an example of a denial of, I think this one is for a rental opportunity. No. This one is for a PayPal account. So this one is someone's applied to have a PayPal credit payment account opened, and they were told, sorry, you're not eligible. And then you can see, I think it's like the second or third paragraph down, it says, we pulled your credit report and we saw serious delinquencies. There were too few accounts that were being paid as agreed, and a lot of accounts were past due. So this person, in addition to that information, also found out down below is that the report that was used was an Equifax report. So when this person came into my office, I said, okay, well, let's get a copy of that Equifax report that was used. Let's take a look and see what they're talking about in terms of all the serious delinquencies. Let's work through it and see what can be done. And this, I cannot emphasize enough how helpful it was to go through this credit report with this person. One, because they had no idea half of the stuff that was on the report, but two, it gave them something to focus on, something that they could improve to improve their chances of getting another credit account down the line. Because unfortunately, credit denials, it can be very defeating. And a lot of people, when they come into my office, it's for some people, there's a lot of tough emotions that come with credit denials. There's embarrassment or frustration, hopelessness. And so getting these letters is a way to channel your energy and to do something about it. So it's very important to get a copy. Here's another example. So here is a rental denial. Someone who they weren't able to get into housing, and so they were given the same information about the credit reporting agency. In this case, the credit reporting agency wasn't one of the big three. It was one of those tenant reporting agencies on site. That's another big one that we see. What's interesting in this case is that we realized that the information that was reported in this case, it was completely incorrect, and we were able to dispute it. And this person ended up getting housing because we took a look at the report that was used. So because the denials can be very frustrating for people, usually people who are facing financial hardship, you're in a vulnerable position. And especially if you're applying for housing and you can't get it, really need a line of credit and you can't get it. What happens is there are whole industries that really take advantage of people who are facing financial hardship, and they prey upon people who are vulnerable. And so what we have seen over the years is a whole host of companies where their whole business model is to offer rescue services to people to help them improve their credit. So I'm going to let Beth, I pulled a little YouTube clip because this is a real advertisement, that this is a sampling of the type of company that you will often see who are offering services to people who are struggling to improve their credit.
Are you denied the things you want because of bad credit? Say goodbye to bad credit and hello to Credit Provisions LLC. Our team can start the process of repairing your bad credit and improving your credit score today. We can rebuild your credit and help you qualify for the credit card, car, or home you deserve. Credit Provisions LLC will repair your credit and remove negative items from your 3 credit reports, including judgments, negative past due accounts, even bankruptcy. Call now. Credit Provisions LLC, a local Houston company. For the people, by the people. Visit us at creditprovisionsllc.com.
So it's a little cringy, that commercial. Every time I see it, I just it makes me a little sad because I can't tell you how many times I have had a client come into my office and they got roped into one of these credit rescue scams. And so I'm hoping that at least one of you is paying attention today, and we are going to talk about the red flags of credit rescue scams, because when you are feeling frustrated and you're up late at night and you're worrying about your finances and you see a commercial come on the television that kind of seems like it's your magical solution, they're going to get rid of all this negative information, it can be easy to get roped into one of these schemes because you're just very hopeful that someone's going to help you. So if you're one of those folks, or someone who's really struggling with their finances, here are the things, if you're considering hiring a company for assistance, here are the things that you should absolutely avoid, or just if you see a company doing any one of the following, do not use them. It is not worth your money. It is not worth your time. Please avoid that company at all costs. So the way that most of the scam credit repair companies work is that they claim to reduce amounts, to get rid of debts, to improve your score by a guaranteed amount. Before even looking at your report, without really knowing anything about you, they guarantee to fix your credit. And these are false promises. If it sounds too good to be true, it probably is. So what the other things that these companies will do is that they'll insist that you pay them for the work before they even do anything. That's unlawful. They're not supposed to do that. They will tell you to not contact the credit reporting companies directly or your creditors. That's not a good sign, because if you're cut off from your creditors or from the credit reporting agencies, you stop realizing what's actually happening on your accounts. You lose your agency. And a lot of times what happens is these accounts get neglected, they stop getting paid, and they get even worse than when you started. They will tell you to dispute information on your credit report, even if they know it's accurate. They'll say that they can erase information even when it's accurate. That's a lie. It's not, you cannot do that. It's not possible to magically remove things that are accurate on your credit report. And then another big one, and this is a huge part of their business model, is that they recommend that you take out another loan, usually from them, to pay off all your other debts, to consolidate your debts, and then you just owe money to them. And it's usually at a higher interest rate. And so really you're just getting yourself into a whole nother problematic line of credit. And the last thing that these companies do is they don't explain what your rights are. They don't tell you how things work. They make promises about having legal representation. Half the time that doesn't actually happen. You still end up getting sued. So it's just a big mess. So what I tell people is, if you need help in improving your credit, you need a little extra assistance, either call an organization like SparkPoint or some other, financial counselor. You can contact our office. We help people all the time. There are services out there that are free that will tell you what's going on and be assistance to you, and not some just horrible trap for you. So here's, it's great if you do find a service or if you want to use SparkPoint or our office, but there's also a lot of things that you can just do for yourself. And so the majority of today's presentation is just to explain how to fix your own credit, how to go through your report so that you can help yourself, so that you're not paying unnecessary money, or if you just want to start getting things going right away, here are the steps that you can take in order to take control of your credit and fix it. So the number one thing that you can and should do is make sure that the information that's on your credit report is accurate. So how do we do that? Well, the first thing you're going to want to do is make sure that you pull your credit report. So I'm really glad that a lot of you have recently pulled your credit report, because that's the first step that I tell everybody: pull your report. Now, there are a number of laws and rules in place to help you with this whole process. So the first one listed here is one of the most helpful and important laws and rules out there. And it's that you have a right to pull your credit report for free. Now, normally you can pull your report for free once a year from each of the 3 major credit reporting agencies. So normally if let's say I pulled my TransUnion report today, I could pull it again next September 2nd for free. But because of the pandemic, what's happened is the 3 major credit reporting agencies have actually opened it up so you can pull your credit report for free once a week until next April. So April 2022, which is amazing. It means if you wanted, you could pull all 3 of your major credit reports every week until next April and see anything that you want on your report. This type of pull of your credit report, it does not impact your score. It's not going to harm you. It's very, very helpful. So I strongly recommend that you go and you pull it right away. The other protection or rule in place that's going to help you with this process is that you have a right to have errors on your credit report corrected. Now, the companies that tell you that they're going to fix everything, and they're going to make everything go away, sometimes they'll insist that they can get rid of correct information, which is not. But you do have a right to get incorrect information off your report. So that's why it's very helpful if you go through your entire credit report and you circle every possible error, you have a legal right to have it removed. Because one of the benefits of doing that, because sometimes people say, well, there's tiny errors, how is that impacting me? You never know. There's a lot of factors that go into your credit and into your score. And you want to make sure that whatever your score and whatever is on your credit report, if you're going to be penalized or helped by it, you want to make sure that it's completely correct and that you're not taking the hit for any unnecessary information. So you have a right to have it corrected. The third right is that if you're a victim of identity theft, and it will, unfortunately, in my opinion, happen more and more as we become a more electronically connected world where everybody has access to things, everything's done online, identity theft seems to become more and more of an issue, a reality for folks. I get notices all the time from previous schools or offices where they say, we have a security breach, you might be a victim. And so identity theft is unfortunately a reality of the way that we function as a society, but you do have protections. If you're a victim of identity theft, we're going to talk a little bit about today what to do about it, and the fact that if there are accounts on your credit report or things on your credit report that are caused by identity theft, you have a right to have those removed as well. The fourth right that you have is that the negative information that is reported on your credit report, there is a limit to how long it can stay there. So for those of you who don't know, negative information stays on your report if it's accurate. Negative information stays on your report for 7 years, except for bankruptcy, which stays on for 10. After those time limits, what will happen is it's supposed to naturally come off your report. But if it doesn't, you can also have that removed. So thankfully, we don't have to live in perpetuity with negative information. If it's accurate, it eventually is supposed to come off your report. And then the last right that you have is that if someone is either unlawfully pulling your credit, unlawfully using your credit in some way, or is misrepresenting, let's say somebody is reporting about you to the credit reporting agencies and furnishing information that's inaccurate, you may have legal claims against them for wrongfully using your credit or reporting about your. So there are some very important protections in place that will help you if you know that you have these rights, so that when you're trying to improve your credit and improve the things that are on your report, knowing that you have these rights can be very powerful. So here's where I recommend you pull your report, is from annualcreditreport.com. I'm going to say that again, annualcreditreport.com. There are a ton of websites out there that try and encourage you to pull your report that people use, but annualcreditreport.com is where you want to go. It is the website that is approved by the Federal Trade Commission, the FTC. It is safe. This is where you want to go. I cannot vouch for any other website out there. You really shouldn't be having to pay for your report. So if you find yourself pulling out a credit card to pull your credit report, you did something wrong. You went wrong somewhere. In addition, so you can either pull your report online, which if you don't have a huge credit history, or there's a couple other reasons, maybe that you haven't had a line of credit in a long time, sometimes you may not be able to pull your report online. Don't panic. It's actually quite common. You can also order it by mail. So you can download the sheet. So the form that's on the right is what the form looks like. It's just one page. You can download it off of the website, mail in your request for a credit report, and you can actually get your credit report mailed to you. It takes about 6 weeks, but if you can't pull it immediately online, you can order it by mail. And usually for people who have very little credit history, this is what we end up having to do. If you can't find a way to download it online, feel free to reach out to our office. Our contact information is going to be on the last slide. I mail out the forms to people all the time. So if you need a way to pull your report, feel free to reach out. So let's assume that you've been able to successfully pull your report. It's in hand. Do not be daunted by how long they are. I have had clients come to my office with 90-page credit reports. Sometimes they're really long, but generally all credit reports have a very similar format. So typically when you look at your report, the first few pages, you're going to see identifying information. You're going to see all of the names that you've ever used to apply for a line of credit, any aliases. You may even see, if you're married, your spouse information sometimes may come up, any addresses that you've used when applying for a line of credit, employers. Then under that section, and phone numbers, that's another one. Under that section, you will find the public record section. So if you've been sued and there's a judgment against you, if you've been evicted, If you filed for bankruptcy, if there's liens against you, you're going to likely find that information on your credit report after that. Then you will likely see what we call accounts in collection. These are accounts where you're delinquent somehow, and the account has been sent to a debt collection agency or a debt buyer, and they're actively trying to pursue that debt against you. So typically you see the accounts in collection there, and then you will find just in general credit accounts. And I'm going to give examples of what constitutes a credit account in the next slide, because I get that question a lot. And then the final section is the inquiry section. So at the very bottom of your credit report, you will see there's actually two parts to the inquiry section. There's a hard pull section and a soft pull. Sometimes it's labeled as every credit reporting agency is slightly different, but generally it will come with an explanation, and it will say, these are all the companies where you have applied for a line of credit. That's considered a hard pull. So if you've applied for a loan somehow, or at some point, they likely have pulled your credit, and that will show up in this hard pull section. And those applications, when you apply for a line of credit and they pull your report, those are the applications where if you do pull it, it's going to impact your score. So usually if you apply for, multiple lines of credit, the more applications you submit, it's going to slightly ding your score, at least temporarily. Then in that same inquiry section, there's a soft pull section where you'll see that there are either financial institutions, lenders, where they have paid to see your information to see if they want to offer you some type of extension of credit. A lot of people you get in the mail like, you're eligible for a new credit card at this rate. A lot of times it's, they've looked you up and they determined that they want to extend you an offer to apply for a line of credit with them. Do not panic if you see a bunch of companies in that section that you do not recognize. In that section, those are not companies that you have applied for credit. They have just proactively looked at your information, and those pulls do not impact your score. So the hard inquiries, the ones where you've applied for a line of credit, that's what you should care about the most. And I recommend you look at all of these sections, every single one of them, because there can be errors in any one of these sections, from your name, your phone number, and even in the inquiry section. If you are seeing a bunch of inquiries and they're hard pulls, and it looks like someone has tried to apply for a line of credit in your name and you don't recognize the company, sometimes that's an indicator of identity theft. So it's worth going through every single section on your credit report. So here's what counts as a credit account, because sometimes people get confused and they're not sure. They want to know, hey, if I pay this bill, will I get credit on my credit report? Will it help my credit? So I just like to put it out there and remind people what's considered a credit account and what will show up on your credit report, so that you know what may or may not help or hurt you. So the things that do get reported on our credit report are things like credit cards and public records like evictions, mortgages, student loans, auto loans, things in collections, judgments, personal loans. The types of things that usually do not get reported on your credit report are stuff like utility bills, unless you go into collections, unless the debt gets sent to a debt collector. Usually paying your utility bills is not going to show up on your credit report. Same thing with rent payments. Typically your rent payments do not show up on your credit report unless they're in collections. I will say there's some changes to this. There have been some federal laws and some proposals for changes to actually help credit people for making timely rent payments, to help them with their credit. But in general, most people, when you pull your credit report, you're not going to see your rent payments show up. You will not see your checking or savings accounts, because that's your money. That's not a line of credit. And you will not see prepaid cards. So sometimes people say, those cards that you can buy at the grocery store, and they're basically gift cards, but they have like a little Visa symbol or one of the other credit companies. That does not show up on your credit report. So don't use those if you're trying to improve your credit. Okay, we're going to do This is going to be like a quick round practice of reviewing a couple sample line items of a credit report. So what I would like everybody to do, since we're doing all of this remotely and you're going to be kind of in the chat, I want you to take a look at the next couple slides and answer the questions that are presented. So if you were looking at this person's credit report and reviewing it for them, what would stand out about this? If you're looking for errors on a credit report and this is what was before you, what are the types of things that you're noticing on this credit report that would stand out to you? So just throw your answers in the chat box once you've had a chance. So I'm saying multiple names and name inconsistencies. Exactly. So we have a Joe Q consumer, a Joseph consumer, a Josephine consumer, a Joe Y, a Joseph Q. So not only does there seem to be a Joseph and a Josephine, but they also seem to have different middle initials. So that's a huge one. What we would call this is there's a potential mixed file where you have two different individuals whose file seems to have been mixed up a little bit. You absolutely want to fix that. I'm also seeing people say multiple social security numbers. Yes. So technically it can happen where there's multiple socials on your credit report. Typically see that when you have spouses apply for a line of credit together, or you're co-signing on something, then you may see the other borrower's social show up on your report, but it's pretty rare. So if you're seeing two social security numbers, especially if you're seeing one that you do not recognize, that's a problem. You're going to want to address it. And then I see someone who mentioned addresses. So, I'm not sure if there's something particular about the addresses or if there's multiple addresses. Maybe it stands out that they're from two different states, or you've got New York addresses and they're employed in Texas. That might be one where you're like, oh, maybe there's an issue with the address there. But yes, those are exactly the types of things that you would want to flag if you were looking at this credit report. Here's another example. So let's say that you're looking at this. Now we're in the public records section of the credit report. What are some of the things you notice about this line item? And two, if this showed up on your credit report, what would you do to find out more information about this particular record? Let's say you don't even recognize it. What would you do to get more information about this? Any brave souls? Yes, so I have what says you would get more information. It appears to be a civil judgment. So follow up with the court. That's exactly right. So in your credit report, there's a couple things. So in your credit report, it tells you, all right, well, it appears to be from Rockwell Municipal Court. That's what this means, Rockwell Municipal. And it even gives a docket number. So docket numbers are basically the identification number given to that case in that jurisdiction. So either you can, or you may want to get a legal aid attorney or somebody who navigates the court system frequently to help you. You can actually contact the court, give them the docket number, and get information about that particular judgment. Because more often than I wish did happen, sometimes people will realize that they got sued. They never even knew about the case. And then it shows up on their credit report. And that's the first time they're hearing about the case. So if that happens to you, go try and track down the case, get the case information, and do something about it. If it's completely wrong and it's not that involves you, then yes, I'm seeing the answers. Dispute it, dispute it, dispute it. Yes, dispute it. If that's not your judgment, you don't want to be carrying that around with you. So you should absolutely dispute that if it's wrong. All right. And then I think this might be our last one or second to last one. So here's another example of a line item. If you're reviewing your credit report, this would be in what we call the adverse accounts or the potentially negative items section. So I would like you, if you're looking at this, tell me who is reporting this information about this person, who was the money originally owed to, and if you were looking at this and you were trying to decide whether or not to pay it, let's assume that you did take out this debt, should you pay it or not pay it? So let's start with who's reporting this information about this person. Collection Recovery Services, yes. So just like in the last line item where it told us the court where the information was coming from, here we can see here's who's reporting it, Collection Recovery Services. Now, who's the original creditor? Who was the money originally owed to? I'm seeing one answer, Charla. We see Sears. Yes, this was originally a Sears account that it looks like it was either sent to this collection company, Collection Recovery, or Collection Recovery may have bought the debt. So now it's, you know, sometimes what happens is people see accounts on their credit report and they say, I have no idea who this company is, but they recognize the original creditor, and it helps them realize, oh yes, I did take out that card. Oh yes, I did fall behind. So it helps you connect the dots. And then for the last question, should you pay it? I'm really glad that someone said it depends, because that is the classic lawyer answer. It does depend. So things that I consider if I were telling someone, should you pay this or not pay it, is one of the questions I have is, well, one, is it a debt that you actually took out and you think you owe? If not, no, you should not pay it. You should dispute it. If the debt is really, really old and it hasn't been paid in over 4 years, it's what we call beyond the statute of limitations. And we'll talk about this a little bit more at length. It's so old that you can't be sued on that debt anymore. So you may not want to pay it because you're not really legally on the hook for it anymore. In this case, this debt was supposed to be removed several years ago. This says estimated date this item will be removed is April 2019. So not only are you probably off the hook on this debt because it looks like it's pretty old, but it shouldn't even be on your credit report anymore. So you may really not want to pay this because one, you can't be sued on it, and two, it shouldn't even be on your report and you can dispute it. So on this case, I'm probably with the folks who said not pay because you're protected on a couple different points. Okay, here's the last one. Oh, someone asked, how can you tell it's too old? That's a really good question. So typically, oh, it's cut off. That's why. I'm sorry. So usually where it says date paid, usually your credit report will do one of two things. It will either tell you when the date of the last payment was made on the account, or usually under every line item, it will give you, it kind of looks like a calendar, and it'll tell you every single month and every year that you've had that debt. And it will either have like a check mark or an okay. That means it was paid. If you're saying like 30, 60, 90, what that means is you fell behind in those months. So basically, if you were to either look at the date it was last paid, where it tells you in that box, or on the calendar, you can roughly estimate when the last payment was made. Then you calculate 4 days from that date. And if it's been more than four years from the date of that date, then it's probably more than 4 years old. There's also ways that you can send letters to the company that's reporting about you to get confirmation of when the last payment was made, if you want to make the argument that the debt is too old. I'm also basing it on the fact that if this account was estimated to be removed 2 years ago, debts only fall off after 7 years. So if it was supposed to be removed 2 years ago, then that means that the time that you fell behind on this debt was a really long time ago, definitely more than 4 years ago. That was a really good question. Thank you for asking it. Okay. Just really quickly, because I know we have a lot of material to get through. So it says, if you pay a partial payment, does that reset the date? Yes, it can. So be very careful. If you've decided, sometimes debt collectors will try and convince you to make payments. They call them good faith payments. They're doing that to try and restart that 4-year clock. So be very careful. If you're considering paying a debt on your credit report, you may want to talk to an attorney before making that payment to make sure that it doesn't come back and harm you some way. Someone also asked, does this count for student loans? Yes, it does. Student loans should also fall off after a certain period of time. And student loans also have extra protections, which I think we may have a student loan presentation at some point. But just so you know, there are a lot of protections for folks who have federal student loans. If you are behind on federal student loans, please contact our office. We have attorneys who focus on this issue area, and there's a lot of assistance out there for federal student loans. So there's no need to have those hanging over your head in any shape or form on your credit report. There's things that can be done. And then someone asked about the difference between the 4 years and the 7 years, which I will get to. So hang tight on that question. Okay, so next one. This is our last one, and I'm going to do this because I want to make sure we get to all of our slides. So here's one where someone, it looks like they've been making payments. Here's that calendar I was talking about. This one, it's green. That means you paid. The red symbolizes that you've fallen behind. And someone may come to my office and say, you know, does this hurt my credit report? Is this helpful that it looks like I've been paying? And so if I were to see this, here are the things that I would kind of note for this person. It does look like they fell behind for a couple months back. It was back in 2015. It's been a really long time since they fell behind. So it's probably not doing that much damage. However, one of the things I would also notice about this account is that their balance is $10,700 when the credit limit's only $10,500. It means this person has completely maxed out this account. It's overburdened. So even though they're making the payments, I would be a little concerned that they're really hitting that limit and had exceeded the limit. So in this one, the couple missed payments that we're seeing back in 2015 isn't really what I'd be concerned about, because it's good that they're staying on top of their payments. That's very helpful, but I would have a conversation with this person about the amount of debt that they're carrying on this particular account. Okay, I'm just gonna go through, I see a few questions. So someone says, can you request that old debts be removed from your report? Yes, and we're going to talk about that in a second. Someone asked, what about schools that are trying to collect for dates that you did not attend the school? Absolutely should get some assistance, and I would recommend contacting our office for that, because you really shouldn't be paying for things that services you did not receive. And then it says, please explain about the companies who bought the debt from the original company. So just briefly, since we're talking about credit and not debt today, if you fall behind on your debts or on your, money that you owe, if you have debts, sometimes what happens is if you fall enough behind, several months behind, the creditor may decide to either send your account to a third party debt collection company to try and collect the money from you on their behalf, or they may decide to sell that debt to a debt buyer who now owns the debt and they have the legal right to sue you. And so it kind of gets passed on. So that's the difference. Debt collectors are still collecting on behalf of the original creditor. Debt buyers have purchased the debt, and you can see them in both forms. The only reason it matters for your purposes, so that you all know, is that there are certain rules and laws and protections that impact debt buyers and some that impact debt collectors, but there are protections for both. Okay, so that's step one. Pull your credit report, circle the errors. You guys are really astute in finding all of the different errors and concerns. So now you've gone through the homework. What do you do about the information that you either found that's erroneous or problematic? What do you do about it? So the first thing you should absolutely do is dispute the errors. All you need to do is print out a copy of your report. For all of the errors, I recommend circling them in red pen or highlighting them. Pull those relevant pages, and then you write up a letter that basically says, here's a list of all the errors I found. And then attach to that letter, attach a copy of the relevant pages and any proof you have that, shows that it's in error. So for example, if it's saying that you are delinquent when your account is current, I get people call me and they're like, I have a phone bill that they're saying I didn't pay, but I did. So I say, circle that part on your credit report, attach that, and then contact your phone company, get proof that your bill is paid in full, attach that to the letter, and then send it in showing that that account is not delinquent. So that's an example of how this works. And so with each letter, whenever you find an error, you want to send a copy of that letter first to the credit reporting agency. So TransUnion, Equifax, Experian, and then to whatever company or whoever's reporting the incorrect information. So in my example, if it's about, let's say, an AT&T bill, I'd send it first to wherever the credit reporting agency is that I see the report, so TransUnion, and then I send a copy of that same letter to AT&T. And the reason you want to do both And in that order is because certain protections apply. If you do it in the reverse order, let's say I sent it to AT&T first and then TransUnion, not as many protections apply. It's a stupid system. Don't ask me why they did it this way, but you always want to do credit reporting agency first, then the furnisher. So in my example, AT&T, and they are supposed to make a fair and diligent search and review of your account. You know, they can't just slap it off. So they need to make a fair review of your account and determine, is this information accurate? Can it be validated? Because if not, they should remove the information. Here is an example of a letter that you can pull off the FTC website. So if you don't feel like recreating the wheel, here is an example of what that letter might look like. I have also included template letters for you all to use. I think they're provided in Word format, but if not, feel free to contact us and I will send it to you. So you're not having to recreate the wheel. You just need to fill out the boxes. It's, you know, very step by step, and this should help you. So draft your letters, collect your proof, and send in these letters to dispute the information.
And we'll make sure that those letters get to everyone.
Awesome. Thank you. I see they wanted to ask if you only have 2 credit reports, not 3. It's fine. You just want to dispute whatever report you're looking at. If you're seeing errors, dispute on those. But more, the information that's on one credit report is generally on all 3. It's rare where you have it on only one and not the other 2. So generally the information is roughly the same. So if you got 2, do it for those 2. And then if you can pull the 3rd, send it to the 3rd. Okay. Here's where we talk briefly about if you are a victim of identity theft. Remember, I said you have extra protections. If someone's stolen your information and they open up accounts in your name, you have extra protections, but you need to follow these 3 steps. If someone steals your information, please first place a fraud alert with the credit reporting agencies. Let them know that you're a victim, and they will put a fraud alert on your file so that if someone applies for a line of credit in the next 60 days, it alerts them, it lets them know, hey, this account has been flagged. The other thing that you should do next is pull your reports from all 3 of the major credit reporting agencies, all 3. And when even though you naturally can pull your credit report for free once a year, if you're a victim of identity theft, you get to pull it even more frequently. I think it's once per month, but at least right away, you'll be able to access your credit report for free if you're a victim of identity theft. So go ahead and pull your reports, all 3, because you want to see what the damage is. Because like I said, generally the information on one report is similar for the other 2, but you just want to make sure that you're seeing everything that's being pulled. And then once you've done those first 2 steps, you want to make an identity theft report on the FTC website. So this is what it looks like. It's just identitytheft.gov. The Federal Trade Commission makes this really easy. They prompt you, they ask you step by step. They say, okay, what kind of account is this? Is this a mortgage, credit card? And then it'll, prompt you to the next one. When did this take place? Did you, make a police report? What's the police report number? It asks you these questions step by step. And then at the end of all of it, what will happen is it populates a report for you that you can just print off. And then you can send a copy of that report in the letters that we just talked about, where you're disputing inaccurate information. What you can use as proof that the debt that you're seeing is because of an issue of identity theft. Attach a copy of your identity theft report that was just populated for you, and then send that off to the credit reporting agencies. Or if you're being sued on a debt and you know that you didn't take it out, you can provide a copy of your identity theft report. It's very important that you get a copy of this report because it provides a lot of protections. So in addition to getting any information that's a result of identity theft pulled off your credit report, debt collectors, once they have proof, once you've provided a copy of that FTC report, and sometimes even the police report, they're supposed to stop all collection activity. And if they don't, and they do have significant proof that you're a victim of identity theft, you actually might be able to sue them for continuing to pursue an account that they know is a result of identity theft. So you can both proactively sue them, or if you're already being sued on the debt, you can sue them. And sometimes it gets them to immediately drop the case doing it that way. So it's a very powerful protection. And I will say, I also, not only did I provide a sample letter of just generally how to dispute information on your credit report, I also provided a sample letter that's identity theft specific. So if you are a victim, I also provided a template letter that you can use to send in the FTC report and dispute it that way. So you've got it covered on both sides. All right. Someone had asked to clarify between the 4 years and the 7 years. So I knew that question was coming, so I have a slide for it. So just to summarize for people, when you borrow money and there's a written contract, which is usually most, credit cards or loans, if there's a written contract in California, if you fall behind on your loan or your credit card, the lender or whoever owns the debt, so it could be a debt buyer, whoever you owe money to, they have 4 years from the date you first fell behind to sue you to try and recover that money from you in court. Debt collectors or creditors, they can't just reach into your bank account and take the money back from you. They have to take you to court, successfully sue you. And only if they've successfully sued you do they get a judgment, and then they can try and either come after your wages or go into your bank account. And so they only have 4 years to do that. If they wait 10 years to come after the money, they're out of luck. I just got somebody who called my office and said, I got a call from someone who was calling me about an auto loan that I fell behind on in 1997, and they're threatening to sue me. And I was like, do not pay that. Please do not pay that. It's either a scam or someone who's really just hoping that people don't know what their rights are. You cannot be sued past the 4-year mark. So just be careful and figure out when you made your last payment, because it can be a very powerful protection against getting sued on the debt. And then the 7 years has to do with how long the information is held against you on your credit report. So even if you can't be sued on the debt and they can't take the money from you after the 4-year mark, negative information still sits on your credit report for 7 years. So when you're looking at your credit report, and let's say you have a debt that is 5 years old. So technically you can't be sued on it because it's past the 4-year period. However, it's still going to sit on your report for 2 more years. So in that case, sometimes people say, well, I can't be sued on it. They don't have a right to legally get the money from me anymore. But I think I still want to pay it because I want to see if I can negotiate them taking it off the report sooner than the next 2 years. So this is the type of conversation I have with clients about, do I want to pay this even though I can't be sued to try and improve my credit? If you're in this position and you have these types of debts, please consult a legal aid attorney or our office. Get somebody who knows what the rules are. I have templates I help people use to send out to make sure that if you're going to pay on a really old debt, that it's actually going to fix your credit and not just end up paying money for no good reason. Old tickets, 4 years, it's supposed to be the same thing. Yes, you can be sued not after the 4-year period, but you're not supposed to get your wages garnished or anything like that after the 4 years. Okay. So you've pulled your report, you've addressed the errors. If you're a victim of identity theft, you've dealt with that. You've gotten rid of all the debt that's too old. If it's more than 7 years, disputed that. And all that's left on your report is the accurate information. What do you do with those accounts? They're accurately reported, but they're not helping you. They're actually hurting your credit score. So here are the things that you could do. One is that you could ask for good faith deletion. If it's an account where you just missed like 1 month and 2 months, but it was, let's say you normally pay your bills, but you were out of town and you forgot. Sometimes you can call up the creditor and say, hey, I'll pay it right now, but can you make a good faith deletion and remove that negative information off my report? And especially if it's like the first time it's happened and you have a really good payment history, sometimes the creditors will remove that negative information and do you a solid. The other thing you can try is to negotiate to settle the account balance. So this is what I was talking about. It would be helpful probably to get a little bit of legal assistance, is that if you're going to negotiate a debt in exchange for them removing the negative information, make sure that you do it in a way that legally it protects you. And so I would strongly recommend reaching out to our office for that kind of thing, to make sure you're using the right language, you're sending the right paperwork, you're tracking it in the right way, because you don't want to find yourself, someone promises that they'll remove information. It's just on the phone. They tell you to go ahead and make the payment. You wire the payment that day, they get the money, and then you end up, they don't do what they promised over the phone. That's really hard to unwind. So make sure you seek out some legal assistance up front so you're not in that situation. The third thing you could do is just wait for the item to time off. It's accurate, it's negative, but like I said, there's a limit to how long negative information can stay on your report. So in the example I gave about the person who the debt is 5 years old, they may decide, look, it's a huge debt. I can't afford to pay it off early or pay it off now to try and get it off my report early. I'm just going to ride this one out. I don't have the $5,000. I'm going to wait the 2 years and it will naturally come off. A lot of people choose to do that. Another option is for student loans. Like I said before, there are a lot of options for federal student loans. You can either rehabilitate or discharge your student loans. So thankfully, most people have federal student loans, and there are things that you can do to either get back on track. They will help you make payments that are based on how much income you're bringing in. And there are actually fairly straightforward ways to get you back in good standing with your student loans. So please, if that's you, get in touch with our office to help get back on track, because it's actually pretty, the options are pretty good. And then in terms of medical debt, that's another special type of debt where there's extra protections for people. And there's something called charity care that most hospitals are supposed to offer to people. So if you are being dinged primarily for medical debt, please also reach out to our office if you want a little extra one-on-one guidance, because there are things that you can do to apply for charity care even after the fact, even years after the fact, or things to do about medical debt to try and get it off your report. So student loans and medical debt in particular, there's kind of some extra special things that you can do to address those if you're finding those on your report. All right. So now we're on the last step. You've looked at your report, you've addressed the errors, you're fixing the negative items, you're finding strategies to deal with the accurate items that are not so good. Now we're going to get to the part that most people ask about, which is, all right, but how do I improve my score? I disputed these issues. I made a plan for all the other accounts, but I want to see my score go up. So I start with saying, all right, well, all the information that's in your report gets distilled down into a number. And usually there's two companies that provide it. And we're going to talk about them and how they come up with their formula generally. But just so that you all know, because I get this question a lot, if you know what your score is, here's generally where you kind of stand in terms of how good is my score? Is this helpful to me? If you're, in the 760 or closer to the 800 range, you're in really good shape. You're probably being offered the best rates on loans. You are considered a very low risk individual. Sometimes people say, well, why am I being charged so much? My grade. So why are they charging me such high interest? Don't they know that I'm already struggling? So why am I having to pay more for those loans? Because I'm struggling. So I should get cheaper rates to help me out. But the way it works is, if you have a lower credit score, you're seen as a higher risk borrower. And therefore, to make up for the chance that you might not pay your bills, the creditors charge you more interest because you're more likely to default. So that's how it works inversely. So how do they come up with your scores? So the two companies that calculate credit scores, or at least the two most well-known companies, are your FICO score and your Vantage score. And the information that they rely on in your credit report is roughly the same. So you're going to see that what they care about most in your reports, it's almost identical. The percentages are slightly different. Their formulas are slightly different, but generally the information is the same. So for both FICO score and your Vantage score, the most important thing that's going to improve your score one way or another is, do you pay your debts on time? What's your pay history? If you pay your bills every month on time, that is going to be a significant portion of your score. If you miss payments here or there, it's going to ding you. I want to stop and say one thing about this in particular, because a lot of times I get people who say, let's say they have 5 accounts that are delinquent and they have $500. Sometimes what they'll do is they'll spend $100 on each account because they want to show like, hey, I'm trying to make payments, so I'm going to pay a little bit to all of my different accounts. That's not necessarily helping you because they're looking at how many accounts are in good standing. So if you only pay $100 to every account, but you're still delinquent on all 5 accounts, it's not really helping you that much. It's almost better to try and eliminate as many negative accounts as possible and owe 2 versus, all 5. That way it looks like you're only delinquent on a few accounts and not multiples. So just be careful on how you're spending your money, because you actually may be not using it as strategically or as well as you'd want to be using it. So that's number one. That's the most important thing, is if you pay your debts on time. The second thing is, so for your FICO score, they care about how much is owed. So both, are you spending like the maximum in terms of the credit limit on the account, and how much total amount are you owed? What are the total balances owed? So they kind of combine those two things. So how much is owed in general? That's about 30% of your score. Then for FICO score, they care about 15% of your score is counted on what's the length of your credit history. So usually what they do is they say, okay, what's the oldest account you have? Have you had the same credit card for 17 years? Or have you been borrowing money since, for 40 years? The longer credit history you have, you're going to have a slightly higher score because there's more information about you to base your score on. Then they care, about 10% is new credit. Are you applying for a lot of new lines of credit, a lot of credit cards? That's about 10% of your score. And then the last 10% is the types of credit used. Do you have a variety of debts, or do you only have credit cards? So my husband, lucky him, does not carry student loan debts the way I do. And so we were comparing, we roughly are the same in terms of our credit. And he was like, well, why do you have a slightly higher score than me? And we realized it was because he had all of his debts for credit cards. So it was all one type of debt, whereas I had a variety. I had some credit cards and student loans. And that slight variation in the fact that I had more variety in the types of debts I was paying actually helped my score a little bit. And the reason they do that, and it seems a little nonsensical, but basically, if you can show you can pay a variety of debts back, for some reason, they give you a little bit more of a bump on your score. So that's FICO score. And then Vantage score, so history of payments, then depth of credit. So depth of credit is they're looking at, are you maxing out your cards? Are you extending, are you using up all of your credit limit? Do you have very little left on your credit limits? Because usually that indicates that, hey, you're really overextended. And then utilization is what's, the history, length of your credit accounts, that kind of stuff, the variety, that's all in the utilization portion. Balances is the total amount of debt that you carry. And then recent credit's only 5% for Vantage score. And then, yes, recent credit is 5%. And then available credit, how much left do you have on, do you have a line of credit still open to you? How much credit or money do you have still access to? That is the last 5% for a Vantage score. All right. I'm going to hold the rest of the questions to the end, so bear with me because I really do want to get through everything. So that's generally how they come up with the scores. They do tinker with them from time to time, so just be aware that things do change over time. All right. So a couple other things to think about is that, before I move on, there is one thing I want to highlight, because even though when you apply for a lot of lines of credit, it does slightly ding your score temporarily. But I will say that these companies have gotten more savvy over time. So in instances where you're shopping around for really big loans, like a mortgage or an auto loan, these companies will factor in that they want to reward people for being smart and shopping around for good rates. So if you apply for a mortgage or an auto loan within a very short window of time, I use the rule of thumb, it's 2 weeks. If you submit all of your applications within that 2-week period, both of these companies will only count that as one credit pull. Even though you've applied to multiple different potential creditors, they will only count it against your score once. And that's because they don't want it to, with a credit card, it hits every time. But with these big loans, they want people to shop around for good rates. So if you do it within a small window, they will only hit your credit once. So keep that in mind. It's okay to shop around for these big loans. Okay, here's some other tips that you can take advantage of and strategies that will help. So we've already talked about it. Review your credit report and dispute your errors. Use your credit, but safe credit. Don't be afraid to use your credit card, but do it with a little bit of caution. Don't overextend. Don't max out your cards. Pay your bills on time, because that takes up so much of your score. If you can, only use up to 30% of your credit limit. I know it's really hard, especially these days. You just got to make ends meet. But if possible, don't use more than 30% of your credit limit. That will help your score. Make a plan for dealing with negative accounts. That's where it's really helpful to talk to a legal advisor on a lot of this. And then if you don't have a credit history, or you have really poor credit, let's say you filed for bankruptcy and you're really struggling to get your foot through the door, consider either opening up a store card if you can get one, or a secured credit card. And I'm going to talk about what those are in just a second. Whatever you do, please don't use the services, the credit rescue services we talked about. Avoid those if you can. Don't fall in the trap. And also don't for these really crazy expensive credit products or things that encourage you to buy things that you don't need. Try and avoid those. Those are not going to help your score. So a secured credit card, for those of you who really just need help getting your foot in the door, what they are is basically it's where you put money down as a security and then you borrow based on how much you've put down. So for example, let's say you put down $200, your limit may be $200. And some people say, well, if I had the money, why would I be using a credit card? Because then I'd already have the money. And the point of a secured credit card is not so much that you have a card that you can use because you need to borrow on that. It's to show, hey, I borrowed the money and I'm able to pay it back. And I'm in the habit of paying back my debts. And over time, the more you pay back on that card, even though it's a secured credit card, it's helping improve your score so that at some point your credit will have improved enough to where you can now be eligible for an unsecured credit card where you don't have to put money down as a security. So that's what I tell people. If you don't really have a credit history, or your credit's really struggling, or you're just coming out of bankruptcy, consider taking out a secured credit card to start getting your foot in the door. Then the last thing we're going to talk about today, and I'm just checking the time, we have a few more minutes, is, it's very important to check what's on your report. It's very important to address the negative information and the erroneous information, but it's also very important that you also shop around and you're thinking proactively about getting into credit, borrowing money that's affordable to you, and you've really thought it through, so that you're not on the other side of things where it's now an account and collections, you fall behind. So you not only want to care about what's already on your report, but what may be on your report in the future. So what we say is, to be a smart credit shopper, shop around, especially for those big debts like mortgages and auto loans. You're rewarded and you're expected to shop around for the best rates. So don't be afraid to shop around. Know also the amount you pay in total, in terms of what are the fees and costs involved, what is the interest rate. And I'm going to have one or two slides and practicing how to do this if you're comparing two credit products. So just make sure you know what's the cost of the actual line of credit. Figure out how much you can reasonably pay. If you're looking at a credit card and you can make the minimum payment, but that's all you can afford, that is not an affordable card for you. If all you're able to swing is a minimum payment, that is the most expensive option for you, because if by paying the minimum payment, you're literally paying the maximum amount of credit or the maximum amount of interest on that line of credit. And creditors will love you because you're going to be paying a lot of money, but it's really that's not an affordable option for you if you can only swing the minimum payment. And then as best you can, read the contract before signing it. I know that credit offers come with a lot of legal mumbo jumbo. The font is very small. Do your best to read it. And here's the things, if you're gonna focus on one thing, let's say you skip the whole contract and you don't actually read the fine print. At the bare minimum, please look for this little box, this 4-column box in that offer, that credit offer. This is called the TILA box. It stands for the Truth in Lending Act. And this box is going to tell you in very basic terms what the cost of that line of credit is. So most people know the annual percentage rate, APR. You hear this on the radio, on television all the time. They say APR is 7%. APR is basically the cost of that credit at a yearly rate. So it's not just the interest rate, but all of they take the interest and all of the fees and costs, and then they calculate what would be that cost of credit over a year. So usually the APR is slightly higher than the actual interest rate of the debt. In my opinion, the most important column is column B, the finance charge. This is telling you in actual dollars and cents what that line of credit is going to cost you. And we're going to see an example in a second. So if I borrow $1,000 and then column B says $300, it costs me $300 to borrow the $1,000. Column C is the amount financed. So in my example, that'd be the $1,000. That's how much I borrowed. And then column D is the total payments that I'd have to pay back. So in my example, I borrowed $1,000 and I had to pay $300 for the opportunity to borrow that money. So I have to pay back $1,300. That's column D. So here you can see it play out. So here's 2 loans. They're both for $2,500. One on the left, you pay back over 12 months. The one on the right, you're paying back over 24 months, but the monthly payments are very similar. One's $217. The one on the right is $244. So really you've borrowed the same amount of money. The monthly payments are roughly the same. But if you were really looking, especially at the second column, look at the dramatic difference in the cost of these 2 credit products. On the left, it costs $109 to borrow that money. On the right, it costs over $3,300 to borrow that same amount of money. So the person who borrowed the money on the right paid 33 times as much money for that credit product than the person on the left. And this is why it is absolutely critical to read the fine print, because if someone were to come up to you and say, I'm going to lend you $2,500, you just need to pay it back to me in $200-ish a month. Most people say, their math is, I know I can pay $200 a month. I know I can afford that. And that's about all they do in terms of their analysis. But if you actually look at the cost on one, you're paying so much more money than the other. So at a bare minimum, if you're looking at a potential line of credit, look to the finance charge, because that's really how you know how expensive that product is. All right, I think I'm almost done. Yeah, so our organization, we have a sister website that we run, because a lot of people are like, I want to know where to shop around or where to get started to look for credit opportunities. So we created this website. It's called Money Happy. And depending on what you're looking for and where you live, we've tried to populate it with potential options for you. We've tried to weed out the really predatory products that we know of. So we only put information in there that we know at least that is not completely predatory, so that people are at least buffered a little bit in their shopping process. And also some of the information that's on this website is, so for example, someone are struggling with their utility bills. We also include, if we know of like programs or grants that are available to deal with those debts, we provide that information on this website. So it's kind of it's a helpful search tool if you're looking for some assistance. And this is all of the different that our office provides. You know, almost everybody in the office is an attorney. Our services are free. The only service we charge a fee for is our estate planning. So that's wills and trusts, and it's even on a sliding scale. So if you're very low income, it's basically free, or you only have to pay the recording fee for the document, which is usually about $100 or so. So it's very affordable for people, but everything else is free. So if you have any of these issues and you want to talk to an attorney about it, please feel free to reach out to us. Our contact information is at the bottom. We're happy to get, your referrals or your calls. So I know this was a lot of information. I really appreciate your time and focus and all of the great questions. I'm going to answer a couple more because I know that a couple came through while I was talking. So I'm going to scroll through and see if there's any questions I missed. But that's it for me. So I just want to get through. There was one more. It says, why is the amount that they want to charge always seem to go slightly up? If you fall behind on your credit cards, if you miss a month or you're delinquent, there's terms in the contract sometimes that will say they can increase your interest rate. So that's something to be aware of. If they change the terms of the card, they have to notify you, but they can change the terms. So you just pay attention to any changes on the card. And then of course your credits, the interest rates are also impacted by your credit. So some people, if you're really credit worthy and you're doing really great, sometimes you can negotiate to reduce the interest rate on your cards as well. And I'm checking.
Thank you so much. I think that's
I think that's it.
Yeah. This is great. Well, thank you so much for all this great information, Gina. We really appreciate every time you're here. Just loads and loads of good information. And everyone, remember, we will have this training on our website, on our YouTube channel. So you will be able to watch it there. And we will be sending out the link to that, also to the evaluation and to all the materials to you. So thank you again for attending, and thank you, Gina, for being here. And thank you, Freddie, for being here. We really appreciate you and your organization as well. And thank you again so much, and we'll look forward to seeing you all at another training soon. Bye for now.